Good.
Brilliant. It's a pleasure to have you with us today, Arran.
Thank you very much.
So today we are going to be discussing property tax and more specifically mortgage interest tax relief. Do you want to run me through what we're talking about by this, Arran?
Yeah, sure. I mean, it's a hot topic at the moment. Most landlords would have filled in their tax return.
Yep.
And essentially what it is that the interest that you pay on your buy-to-let mortgage, you used to be able to claim that back.
Well, you still can, can't you?
Well, sort of. I mean, at the moment, it's only 75%, but by 2020, none of it is going to be able to be claimed back. It is a problem because essentially landlords are going to be taxed on their revenue instead of their profits. So as an example, just to put it in perspective, a landlord who has a property which is generating £10,000 worth of income, they might have expenses like service charges and ground rent and lettings fees come to £2,000, and on a £150,000 property with a 3% interest-only mortgage, will give you £4,500 as your mortgage interest. So previously, you'd be able to have the gross profit of 10,000 minus 2,000 minus the 4,000, and you'd only pay the tax on that amount.
On the profit?
On the 3,500 profit.
But now we're having to pay the tax
Exactly.
on all of the income.
So now you're going to be, by 2020, you're going to be paying it on the 8,000. So obviously, people that are higher income tax earners are going to be paying the most tax on that because it goes on top of your annual salary.
Of your income tax?
Yeah,
no, exactly.
Exactly.
Now, there is sort of something that's becoming a bit more up and coming within the property investment world. By this, we're talking about short-term lets and, more importantly, furnished holiday lets.
Yeah, exactly. So the only thing, normal buy-to-lets are not going to be able to get around this. It's a fact, unless they completely change the tax issues.
We both know that's not going to happen, don't we?
No, it's not going to happen. I mean, not with everything else that's going on.
Of course.
But essentially, holiday lets is a great opportunity. But what happens is you're running it as furnished holiday lettings business. Okay, so what you do is you would convert, for landlords, what they do is convert their properties, which it's not going to fit every property. Like holiday rentals will be in areas near the coast or in busy, popular towns. And they would convert it fully furnished into a business where it's run commercially for a profit, it's available for 140 days a year, and is rented for at least 70 days.
Yeah, I mean, it does all sound a little bit complex for your just sort of average Joe. I mean, is this only something a certain criteria of people can get on board with?
No.
Or, I mean, what? So there's nothing to stop your average investor getting on board with taking advantage of this mortgage tax relief?
I think what it is more about the suitability of the property. Obviously some properties are not in an area which is very touristic, so you're just going to have to carry on renting it as buy-to-let. But anyone, because it's residential property, anyone can put their advert on Airbnb or holiday lettings once they've furnished it and start the business.
Okay, fantastic. So again, mentioning a few sort of big names there, Airbnb, Booking.com, both sort of shout to me personally, is there going to be any additional costs involved with this?
Yeah, sure. I mean, you are running a business, and that's how you can claim the mortgage interest back now. Right. And I guess some of the disadvantages is the extra advertising cost. But there's, if someone doesn't want to get hands-on and do that themselves, what you could do is, there are some furnished properties within a resort where the resort operator would then go and do the refurbishment of the property. They would find you all the tenants, and then you'd pay an amenity charge, just like a royalty fee, to the operator, and that's typically 6% of the gross income. So for all the hassle, instead of paying the advertising company, you've got guys that have got experience in this and run it for you.
And of course, in with that 6%, you get the added bonus of having all the available facilities of the park available to,
definitely,
to potential tenants.
I mean, that'll increase, we feel the occupancy, because you've got, in a lot of these resorts, they've got water parks, indoor pools, beauty parlors, restaurants, so having that as part of the facilities is hopefully going to, draw more customers in. But I think the other hidden gem, which we haven't highlighted here, is the capital allowances. So whether you're a landlord that's converting the property yourself, if you've got a normal buy-to-let, all those conversion costs, the additional furniture, to get it up to that standard that people expect from a holiday rental property, that can all be claimed back as a capital allowance. So what that means is, let's say, for instance, you've got a 200 grand property and it costs 50, 60 grand to get that up to the standard. For the next few years, that capital allowance wipes off all your tax. So you're virtually paying no tax.
Paying no tax.
And that's the real benefit.
I mean, what's better than no tax as well?
We all love it.
Sounds like something dreams are made of. And in relation to returns, I know we've sort of briefly touched on this. What sort of returns, if you want to break it down into more layman terms, say, what sort of returns can you expect to see on an opportunity like this?
You're really looking at 10 to 15% return on cash invested.
10 to 15%?
Yeah.
Wow. And you're not really seeing anything else like that? Especially on a residential property.
Not after tax, that's what you need to look at, is the after tax returns.
Yeah.
And, how that's achievable is that, there's mortgage finance available.
Right, okay.
So you're getting, like, all buy-to-let landlords want to see what gearing they can get. So you can get 60% finance as a UK citizen and 50% as an overseas investor. And it's at an affordable rate between 4.25 and 4.5%.
Okay, so yeah, and that's obviously still to come off of the overall profits then.
No, that's factored in. So when I'm saying net, it's a net return on cash.
Net. Wow.
10 to 15%.
Very, very good returns. Now, another very hot topic at the moment, as I'm sure you'll be aware, Brexit.
The old B word, huh?
The old B word. Let's not beat around the bush.
Yeah.
It's happening. It's fast approaching.
Yeah.
What is it? A month today, is it?
Well, hopefully, they don't shift the goalposts again. But 29th of March could be D-Day or the end of B-Day. But I mean, obviously with Brexit, there's a lot of uncertainty, but that has devalued the pound. Okay?
Yeah.
So it's been more affordable to take your holidays in the UK.
One way to look at it, yeah.
Now, after Brexit, what are the potential implications? Pound could still potentially be low, but the additional charges for flights, tariffs, extra visas, the hassle of getting those visas, all of those things really could mean that there'd be continued demand in the UK property, particularly holiday lettings and hotels. And that's where we think it's a great sector to get involved in right now, particularly for the tax savings and obviously, for generally what's going on with Brexit. So it certainly hasn't been a hindrance. It's creating opportunities.
I mean, these type of parks, they're very popular at the moment as it is. I mean, I go to Centre Parks at least once a year. I'm sure you go to another similar one. It's
quite costly, but for kids, it's a perfect holiday.
Yeah.
You're there, you've got your own space, you're not in a hotel room, it's quite laid back.
It's brilliant. And yeah, no, it's a very, very good point about, post-Brexit. It's just going to become more popular in reality, isn't it?
Hopefully.
Now, as well as this, is there any other possible ways investors, it's all well and good them having the information, but what would they do about taking the next steps? How would they find out about this type of investment?
Well, look, I mean, we do have live opportunities that come from time to time, and we're very excited about the one that's in Cornwall at the moment. It's an existing resort. It's got an average rating on TripAdvisor at 4 out of 5 stars. And in addition to that, you've got the uplift, 7% rental guarantee for the first 3 years, which will mean that with the mortgage finance and the tax benefits, you'll get that 10% return on cash. And then during that time, as I mentioned before, they're going to be using that money to uplift the resort. So it's got a water park, it's got all these features that I mentioned, but they're going to do an indoor wave pool.
Wow.
And what they're going to do is increase the occupancy to make it for like appeal in winter time and that as well through other activities. So what they're aiming for is to increase the revenue, that by year 4 and 5, where you've still got this capital allowance, you should really be getting up to 12 to 15% return on cash.
Yeah, the numbers that we're all after.
Yeah,
really,
exactly.
aren't they? Definitely. I mean, okay, that's brilliant. I mean, you've sort of covered most of the topics you was after today.
Definitely.
Did you have anything else to add?
No, I just think if they want to have a free consultation about this or other topics, they can go on to, onetouchinvestment.co.uk and just register there.
Most
we can send you information on the latest availability.
Most definitely. Well, brilliant. Thank you very much, Arran. Thanks for your time.
Yeah, thanks very much.
Pleasure speaking with yourself. Don't forget, guys, if you found anything useful today, please hit that thumbs up button down below. Also, subscribe to the channel as well for more frequent videos related to property taxes, and a lot of topics, again, all property related. Thank you very much.
Thank you.